And thanks for joining us for AOA, Agriculture of America. Coming up on today's program, we are going to talk ethanol-related issues, biofuels issues with Kurt Kovarik, Vice President of Federal Affairs with Clean Fuels Alliance America. He's going to join us coming up here after the bottom of the hour today on the show. We'll also have a look at some of the latest news headlines coming up at the end of today's program. And we're going to have our first Tractor Zoom Tuesday conversation of 2026. Andy Campbell, Director of Insights for Tractor Zoom, is going to join us coming up here in segment 2 of today's AOA. A lot to get to. Thanks again for joining us. I'm your host, Jesse Allen, enjoying some milder temperatures here to start off the new year. Wondering if that's having some effect maybe on the wheat complex, some concerns about dryness and temps in parts of the plains. Also, just watching some of the geopolitical headlines and more impacting these markets. Let's talk about it. Joining us now, Garrett Toy, Ag Trader Talk. Garrett, Happy New Year, my friend. Thanks for joining us on the show.
Yes, Happy New Year. Back at you.
Well, what's your thoughts on this grain complex? We saw a decent round of buying Monday to start the week. Kind of mixed action Tuesday. Wondering if it's going to be a turnaround Tuesday, the opposite direction or not. I mean, what's your general feeling here as we kick off the new year in this grain trade, Garrett?
Well, I was kind of expecting, yesterday's trade on Friday. I mean, I think what happened is a lot of traders took the holidays off and markets got pushed around a little bit, traded down to the bottom end of its range, and maybe got a little bit too cheap. And, I think that's what kind of was what I was telling customers is that, expect a reversion to the mean trade and get back towards back within the range and back towards, levels that we maybe saw before the holidays. Now, it is interesting is that, Friday and the day and New Year's Eve, we saw that big selling and open interest jump. So suggests that we had a lot of new sellers in corn on New Year's Eve and on Friday that jumped in this corn market. And we chased them all out yesterday, it seems like, given the open interest changes here. But, I think it's just reversion to mean trade. We've got 3 full trading sessions before that important January crop report, and focus turns to that. Volatility will start picking up here as well. You also have some beginning of the year index fund rebalancing, which tends to favor corn here a little bit. It's a mechanical trade. I wouldn't really expect much. This corn market is what we're telling people is there's still no story. I think, yield can come down a little bit. Carryouts still stay relatively large. There's been no foreshadowing here. The private equity trades and hedge funds that do their due diligence on yields and whatnot, if they were fully expecting a bullish surprise in corn, you would probably see some positioning for that. So in the meantime, I think, the range kind of continues. We get down to 430. We know that there's good demand in corn. We get up to 450. We know that the farmer's selling. The biggest thing that I'm a little bit concerned about is that, this time last year, we had a fairly substantial rally that everybody knows about. We were able to trade $5 corn in the February, but, for new crop, that was really the only opportunity that we had to sell corn. And this corn market just isn't doing anything. And that's a concern to me. Now, the bean market is rallying. Nice reversal on Friday. Follow through today. We might be able to get back up towards, the upper end of the range here. But, I'm real cautious about bean rallies in here. Yes, we had a flash sale reports that China's Sinograin bought 10 cargoes of beans in the last 24 hours. USDA confirmed about half of that via flash sales. Doesn't mean that the other half wasn't bought. It was just not reported. But the South American weather, the forecasts are pretty active for rains. We're 45 days away from harvest, and I think that you're probably going to see, if this trend continues, these South American production estimates start to gravitate higher. Some of that may be offset by reductions in Argentina, but that's the bias. And like I said, we're 45 days away from harvest. Conversely, I mean, basis is firming up here in the West. I think the pipeline's gotten a little thin. in beans, and that's going to be an interesting trade. Farmers sold beans out of the field. They haven't sold anything yet. Flat price has done nothing but break since the last half October, early half November, and spreads have widened. So maybe the market got a little bit complacent, and end users need to fill their needs.
Garrett, this big January set of reports coming up here Monday from USDA. I know it's always volatile. A lot of folks, it could be a tone setter for the year, but I hate to even throw this out there, but I'm already seeing some of the rumor mill, and you may have as well, the talk of acreage for 26 here for the U.S. and 95 million acres of corn on the table again, things like that. I just have to wonder if this trade is already starting to hear some of those whispers on social media and whatnot of what our acreage could look like this year.
Absolutely. I mean, seed prepays have been done, early prepay periods, 2 months old. So, acres are, you can draw some, somebody's drawing some conclusions from those. The fact of the matter is, we had 99 million acres of corn this year. Last year, we had a fairly significant soybean sell-off that, pushed all those acres to corn. I suspect just rotational type trade to see, 4 million acres shift back to the soybeans. But like you said, 95 million acres of corn, if we cut 4 million acres and they shift to beans, 95 million acres is still a lot, that just kind of prevents this balance sheet from getting too tight. The X factor out here is still the Chinese trade negotiations, and maybe China comes in here and buys some U.S. corn. That would definitely be, something from left field that would potentially change this corn market. But acres are concerned. And like I said, if we don't have this opportunity for a rally into February to forward sell new crop corn, it could be a tough year.
Got a minute left. Cattle complex. Any thoughts there as we kick off the new year, Garrett?
Yeah, I mean, the feeders are kind of leading here today. Hogs are a little bit weaker, but fats are kind of moving. December expiration is now behind us, and we're starting to see Feb start to gravitate towards those levels. I do think there were obviously New Year's passing. We're through the holiday trade. I think packers are kind of stepping in here to look at where they're at as far as ownership, and I do think cash is going to be firming here on as demand picks up, but the market feels still like a holiday hangover. Cash is a little bit sloppy out here. I just think that we're kind of gravitational here. We recovered a lot of the break. We're kind of seeing fair market value. I think the market's still kind of looking over their shoulder for the next shoe to drop as far as border reopening, but then Mexico had 2 new screwworm cases here in the last 48 hours, so that just kicks that can down the road.
Always remember that risk of trading futures and options can be substantial. Garrett Toy, Ag Trader Talk. Good to hear from you, my friend. Thanks for joining us on AOA.
Thanks for having me.
Coming up next, we're going to talk with Andy Campbell, Director of Insights at Tractor Zoom. Back with more on AOA right after this.
Information America's farmers and ranchers need. AOA. Now, back to Jesse Allen.
What should farmers be thinking about when it comes to equipment as we get into 2026? Let's talk about that and take a look at some of the trends we are seeing as we start the new year. Joining us now, he is the Director of Insights at Tractor Zoom, Andy Campbell. Andy, Happy New Year, my friend. Welcome back to the show. Hope all is well.
Yeah, Happy New Year to you too, Jesse. Things are going well and can't complain because I think it's like 50 degrees here in Iowa right now.
I was going to say, when I was visiting back home in northern Iowa, we were talking about this during the break. It wasn't so lucky. It was blizzard conditions and below zero temperatures. But here we are with a mild start to the year. And, I wonder, I now don't want to get ahead of myself too much here, Andy, but are the mild temperatures starting to get folks revved up and excited for spring potentially here? It might be a little too early, Andy.
It's early, but I'll tell you that having this warm weather does something to you. Like yesterday, it was probably the the best sunrise and sunset I have ever seen in Iowa. And we've got some good ones sometimes. And it puts you in a different mood. The days are getting a little bit longer and you start thinking a little bit more about spring. And so while we are, probably 5 snowstorms away from even, breaking the planters out of the shed, it at least gets you thinking, gets you excited about that.
Very true. Well, we still got winter show season in front of us here. So
Right.
I think a lot of folks are going to be, heading to Farm Machinery Show, Commodity Classic, and things like that here in the next several weeks, and looking at new equipment and having those conversations and more. But let's talk about what you're seeing out there at the dealer lots and on the auction block and much more as we go through some of these various segments. Let's start with row crop tractors. What's the trend right there right now?
Yeah. Row crop tractors is a good one to start with. And much like, a little bit of the fog that's outside right now, I think that last year was really defined by murkiness, a lot of buyer hesitancy out there. It slowed down sales off of dealers' lots. And now we're at least in a point where it might not look great in terms of a horizon. It's clear. And that clarity is bringing a little bit more consistency into what we're seeing with the economy of this piece of equipment. So with row crop tractors specifically, I do think they're a bit of a sleeper right now. It's really because I think they're expensive and they're sitting on dealers' lots. There's incentive for them to move it. But unlike in 24, there were way too many of them. Dealers were incentivized to move them through auction, and they did. And they took some pretty big hits. Now the sentiment, let's hold on to these things. Let's have meaningful conversations with farmers and let's make those sales and push those out through the retail channel. And that's what's happening with these. So what we're seeing with row crop tractors is exactly a auction that's strengthening right now. So the auction market is actually getting a little bit stronger than we saw in late 25, but the retail values are still dropping a little bit. So there's your opportunity to potentially go talk to a dealer and then, make that deal. You can get warranty, you can get financing. There's a lot of other incentives go along with that. But that's where I think the row crop tractor bright spot's going to be up until the springtime. That's when I think the seller incentives might start to fade a little bit. And the little bit of oversupply we're dealing with right now, that's going to start to wane. And you've got till spring, I think, for this bright spot for row crop tractors.
I'll jump up here to 4-wheel drive tractors. We'll stay on the tractor segment here for a second. What are you seeing with that portion of tractor sales?
Ooh, I am seeing a lot, at least a lot of activity, a lot of things going on, but not a lot of it is great if you're in the market of selling 4-wheel drive tractors. They're kind of the elephant in the room right now. Definitely beat up. It's not going to last forever because AEM just released their new sales data back in December, actually. But in November, their new sales of 4-wheel drive tractors were down 57% year over year. The used sales were only down about 16%. So there's less new coming into the system. So that's going to help correct the overall supply that we've been dealing with for so long. But that is pushing the auction market down still. So auction market's down about 7% year over year. You can still get a decent deal out there. But if you're really looking for a 4-wheel drive tractor, I've got a couple tips, a couple things that you should probably do if you're in the market for this. The first is look at auction and set up some kind of search. So you can go to tractorzoom.com or maybe some other sites have it as well. But look at a specific make model. And if you see an auction coming up with multiple of the same make models that are selling at a particular time, you're going to tend to get a better value. There was actually an auction for, the 580 quad track Steigers. 9 sold last month, but 4 sold in a single day, 3 in a pretty tight radius around Kentucky, Illinois. All of them brought below market value. But the other one that sold the same day out in Washington was well above market value. And so if you get that oversupply at auction at a particular day, you're more than likely going to get a good deal because, not enough eyeballs for the same type of tractor. So that's a potential opportunity. The other thing that you should do, obviously, just talk to your dealer. Start that discussion, see how far your money can potentially go.
Andy Campbell, Director of Insights with Tractor Zoom, joining us here on AOA. How about the sprayer market? What stands out to you there as we start off 2026, Andy?
Yeah, sprayers have been fascinating this whole past year because we've obviously been going through a tough time with the overall farm economy. A lot of equipment values are down, but not so much with the sprayers. And I think that has a lot more to do with their immediate ROI. There is a lot of benefit to spraying late in the season last year, especially on the corn and the fungicide. And so that helped prop up values to where Auction values were pretty steady. Dealer retail values actually were rising a little bit, but I think there's still too much oversupply in the market. It's not going to last forever because the spring up until March, April is your main buying season there. And so that oversupply is going to get whittled down. There's not a lot of new coming into the system. And so if you're looking for sprayers, I'd say you've got about 4 months to really go approach dealerships, find that make model you're looking for, talk to them, and then, proceed with the deal there, because this oversupply, the dealer lots are going to look a whole lot different in the middle of summer than they do right now.
I want to get some overarching takeaways from you, but any other individual segments of equipment that you're keeping an eye on here as we start the year, Andy?
Yeah, so keeping an eye on all of them. I just did a massive webinar. We have it on TractorZoomPro.com if you're an equipment nut and you want to find all the nitty-gritty details. But really, there's a lot of value to be found in things that are going sideways right now. Not in a bad way, just sideways in terms of flat. Combines are a great example. There's not an oversupply of Class 8 combines right now. They were the story last year. They're steady and increasing just a little bit in terms of their value at auction. Dealers are selling those through the retail channel. And so what you're seeing is a supply chain that's just not out of whack with a lot of these pieces of equipment. So there's opportunity there. I will say we did look into compact track loaders, and the newer compact track loaders, they're doing well. The prices are boasted up a little bit. The used ones, though, if you're looking for a deal, the older you get, the harder they've been hit. And so you're starting to see better year-over-year deals on older compact track loaders.
Well, as we close out, got a couple minutes left. What should farmers be thinking about here, Andy, as the spring season gets near? They're thinking about what they need on their operation, maybe some trade-ins or whatever the case may be. They're looking at their equipment. What's the key takeaway here as we're getting ready for 2026?
Yeah, I think we are now definitely into the phase of think about, you want to be able to make smart decisions on your own terms, not when you have to make them. And I think because there hasn't been a lot of new equipment purchased in the last almost 3 years, the stuff that's on farmers' fields in their sheds right now has potential. It's getting older. Maintenance has been delayed. There hasn't been the amount of service inside the shops. And at some point, we're going to have some failures on the farms that are going to cost people more. And so I would think long-term about the operation, and do not get yourself into a situation where you have to make a decision. Choose the time that you want to go to battle. Choose the time that you want to do your preventative maintenance, and be proactive about it. Because like I said, with that, when we prolong new equipment purchases for this long, we tend to get in a situation where some things will break unexpectedly. And unlike 4 or 5 years ago, when we could go to the dealer lots and have our pick of equipment, that's not going to be the case anymore. Dealerships are carrying less inventory now because of higher interest rates. They're not going to carry, it's not going to be a shop where you can go pick off the shelf. So it's going to be more expensive to replace because it's not going to be close by. So pick and choose your battles, be intentional about your preventative maintenance, and don't get yourself into a situation where you have to make a decision. Choose when you want to make that decision.
Great thoughts. You mentioned it earlier too, the Tractor Zoom website. If folks are indeed in the market and looking, they could set up searches, create accounts and things like that, and track various auctions and more, all on the website, right, Andy?
Absolutely. Like I said, go to TractorZoom.com, do a saved search. It's free. And then you just get emailed when your piece of equipment comes up, and you can do mile radius. You can do the price point that you're after. You can have it do the work for you. So then you find the piece of equipment, when it's available.
Always enjoy the insights and the conversation. And thanks for joining us again here this month on AOA. Andy Campbell, Director of Insights for Tractor Zoom. Good to talk with you again, my friend. Have a great one, and we will talk to you next month.
Sounds great, Jesse. Thanks for having us.
You bet. TractorZoom.com again for more. Coming up next, we're going to talk ethanol and biofuel related issues. Vice President of Federal Affairs for Clean Fuels Alliance America, Kurt Kovarik, will join us coming up after this on AOA.
America's farmers and ranchers need. AOA. Now, back to Jesse Allen.
And as we continue here on today's Agriculture of America, we are getting connected with Kurt Kovarik from Clean Fuels Alliance America here in just a moment. And we're going to have a conversation about various ethanol and biofuels related issues. A lot of things happening at the federal level, the state level, as well as their upcoming conference is going to be happening here this month. And we want to get some details on that as well. So let's bring him in. He is the Vice President of Federal Affairs for Clean Fuels Alliance America, Kurt Kovarik. Kurt, good to talk with you again, sir. Happy New Year. How are you?
Happy New Year to you, Jesse. Glad to be with you.
Well, let's talk about some of the federal level issues that we are watching. And Kurt, I know some of these issues, I feel like a broken record. We continue to talk about them year after year, but here we are once again with more talk about the renewable fuel standard. What's the latest when it comes to EPA's RFS volume targets and why they matter for things like soybean demand, et cetera, et cetera? Let's start there.
Absolutely. Well, I wished we would have had RVO, renewable volume obligations from EPA in 2025. Unfortunately, we did not. The expectation from EPA is that they will finalize them in the first quarter of 2026. That's how EPA has responded to a couple litigation items, including one that Clean Fuels has sued them on to get this done. I hope that they'll have it done prior to kind of March. We would expect them to have this hopefully proposed to be finalized by the end of January, perhaps early February. Why does this matter? Part of the reason that 2025 was such a lackluster year for the biomass-based diesel industry was because we were in the third year of a final rule proposed by the Biden administration that woefully underproposed the volumes for biomass-based diesel under the renewable fuel standard. And by woefully, I mean they set our volume for 2025 at 3.3 billion gallons. In 2024, we were well over 5 billion gallons of a domestic market. So what did that do to the industry? It means that many of our producer members were producing in the neighborhood of 50 to 60% capacity. A lot of folks have idled facilities. The market economics have just been terrible. And the downstream impact to that is, or upstream, is that there's less value for the feedstock, for the soybean oil, for soybean farmers, canola oil, animal fats, distillers corn oil, all the feedstocks that we use. And it means we get less fuel into the marketplace, impacting gas prices. So when we have a Trump administration that is very America first and promoting domestic markets for U.S. commodities, we've been very successful in getting particularly USDA and the president to recognize homegrown biofuels utilizing crop-based feedstocks are a key component to deliver market value for U.S. farmers' commodities. So we're hopeful. They proposed a very robust number. We were very pleased with what they proposed for biomass-based diesel for 2026 and 2027. We just need them to finalize it so that our producer members can put their foot on the gas pedal, so to speak, and return this industry to where we were in 2024.
EPA's deputy administrator was on this program a little over a month ago, and he said that they want to take the time to get this right. So I wonder, how long might this take, Kurt? Is this going to be something we see here in a month? Is it 6 months? Or do we really even know how soon this could get finalized by EPA?
They've committed to not later than March 31st. If you take their court filings at their word, the big issues that they're wrestling with are the overall top line numbers, how to deal with the reallocation of waived gallons that are exempted from small refiners, and then a new novel concept that they proposed to reduce the incentive for foreign fuels and fuels produced from foreign feedstock. Those are really the three critical issues that need to be resolved, but they're not easy. They're complicated. They're controversial. They have stakeholders on all sides. Mm-hmm. Our hope is, and if you look at the press release that USDA issued when they announced the farmer bridge assistance just before the end of 2025, there were a couple paragraphs in that press release about this administration recognizing and being the most pro biofuels administration ever. I agree with that. I want them to finalize this so that they send the right market signal. In my mind, the longer it takes, maybe the more detriment that might be done to biofuels, as other stakeholders make headway either with the president, the administration, or with the EPA administrator. So my goal is, let's get this done and finalized in a positive fashion to send that market signal, to provide that opportunity for soy and canola farmers and livestock producers.
Another federal level issue we should talk about that I feel like we haven't touched on a whole lot here in recent months. It's been quiet, and that's regarding 45Z and sustainable aviation fuel and things like that. What's the latest on the proposed 45Z clean fuel production credit rules, how they could influence some of these long-term markets for soy-based biodiesel, renewable diesel, SAF, et cetera, Kurt?
Yeah, Jesse, great question. This is another area of frustration for us, and that is, the clean fuel production credit enacted in August of 2022. The Biden administration released very scant guidance in January of 2025. We had the one big beautiful bill in the summer of 2025 that improved and extended the clean fuel production credit when many other credits for solar, wind, electric vehicles were being put on the chopping block. We demonstrated strong bipartisan, bicameral support to get it improved and extended. Now we're just waiting on that final guidance so that market participants know the rules of the road. We were anticipating guidance before the end of 2025. Proposed guidance is sitting over at the Office of Management and Budget for what we call interagency review. We were told it was going to be expedited. We were anticipating something. I was hoping to have this in my stocking on before Christmas. Unfortunately, the Treasury Department didn't deliver. So we're working strongly with our champions on the Hill to try to get momentum behind this, to get it released here very soon. And what this does is it provides the incentive to producers for the production of the fuel based on what feedstock they're utilizing. It's a more complex system than we've ever been subject to before. You have to score the carbon intensity of the fuel and the feedstock, and the credit value is based on that. So the more clarity that we get, again, providing that market certainty to our producers, and I would say to all the farmers out there, these are two critically important components to your livelihood, the renewable fuel standard and 45Z, because it drives demand for that soybean oil. Right now, historically, over the last 2 years, we've been consuming about 1 billion pounds of soybean oil per month in the biomass-based diesel industry. That's about 50% of all the soybean oil available in the United States. Food demand is not growing for soybean oil. The growth area for soybean oil is the biomass-based diesel industry. It's the reason we've had this great expansion in soybean crush, but that soybean crush needs to be supported. They need to have the market drivers to sustain that investment that they made, billions of dollars of investment. That has to be delivered through market expansion of biomass-based diesel. We've got markets that want the fuel. The signals need to be sent, and the support needs to be there from these federal programs.
Kurt Kovarik with Clean Fuels Alliance America joining us. And thinking about that demand, I want to talk about a state level policy issue, California and CARB, and some of the decisions they've had that impact biodiesel blends up to B20. Talk about this situation and what's going on in California right now, Kurt.
Well, this was a huge win for us just before the end of the year, and kudos to the Clean Fuel State Policy team and all of our advocates who've been working in California. This is a piece of red tape that has existed for many years. Clean Fuels has been working with California Air Resources Board to remove it since at least 2022. It was a regulation that required mitigation for NOx emissions if you were blending biodiesel over 6%. Essentially what it did is it capped the California market for biodiesel at 6%. And when you look at California's market, enormous consumption of petroleum through their low carbon fuel standard, enormous potential for low carbon liquid fuels like biomass-based diesel. Right now, on average, California's fuel is about 75% renewable. But this NOx provision essentially capped biodiesel at 6%, and the rest of the market was renewable diesel. Well, biodiesel is primarily produced in the Midwest from soybeans. So our goal was to remove this because CARB's own data indicated it was no longer necessary. And on essentially December 31st of this year, of 2025, they announced that they're no longer going to enforce this. It was no longer necessary. And this really unleashes the spigot for biodiesel in the market in California. 240 million gallons going into California in previous years of biodiesel. This has the ability to double or triple that. When you think about a biodiesel plant in the Midwest, on average is about 60 million gallons. If you double that 240 million or triple it, that's 5 to 10 biodiesel plants that now have a new market in California to ship their fuel. A great opportunity for them and huge win for us heading into 2026.
Absolutely. Real quick, we got about a minute left. You guys have a great conference coming up January 19th through the 22nd in Orlando with a heck of a lineup, Kurt.
We've got a great lineup. The usual topics that we're going to discuss are federal and state policy, as we've covered a bit here, but then also new market opportunities in marine, aviation, rail, home heat, and the opportunities there, as well as all of the work that's being done on international markets. We have a great opportunity for international markets for our fuel now that's developing, and then what this all means for our feedstock providers, whether that's new innovative feedstocks like cover crops and winter annual oil seeds, or just getting additional oil from the soybean, canola sectors, ethanol, livestock, etc. So great opportunity to bring the whole industry together for those 3 days in sunny Orlando. I hope people meet us there.
CleanFuelsConference.org for more. Kurt Kovarik, Vice President, Federal Affairs, Clean Fuels Alliance America. Good to talk with you again, Kurt. Thanks for joining us on AOA.
Jesse, glad to be with you. Happy New Year. Look forward to many more conversations in 2026.
Absolutely. We'll take a look at news headlines coming up next on AOA.
Information America's farmers and ranchers need. AOA. Now, back to Jesse Allen.
Well, no doubt 2025 was quite a year for beef and the price of cattle as we saw record-breaking prices throughout the year on the futures market and at the sale barn. Bob Rodenberger of Stockman's Livestock Auction in Apache, Oklahoma, recaps a great year for beef prices.
Historical highs in the cattle business. I mean, we went from a year ago, we were trading feeder cattle like at 260 to 270, and by June, I think we were trading them at 380. At the end of 2025, we hadn't seen prices that high. And here we are, we put another $125, $130 on the value of a 8-weight steer. These calves, killing cows. In the beginning, everybody made good money. The cow-calf man's still in the driver's seat as far as being able to get paid for what he's actually been doing the last 3 years for sure. The stock operator last year made good money. His margin's been cut down now quite a bit because of what the first cost of the calf is versus what he's worth.
Now, drought was a well-known factor in decreasing the size of the beef herd and driving up prices for the producer.
This is one thing we can say, for years, I'd talk to the old timers and I'd talk about a drought and they say, son, you ain't seen a drought. Until we got in the drought of 2012, then I'd have them call and tell me, now you're in a drought. So there's not anybody but this generation now that will be able to say, we've not ever seen a market like this. But it's phenomenal. I mean, we had a big correction that started in September and took $70 off of it. Well, we've already got it back half of that, and we're still above what we ended 2025 at. We're still $30 100 over that. So, I mean, the years ended up great overall.
Rodenberger talked about what's ahead for producers in 2026.
Take out all of the riffraff, all the social media stuff, and get down to the basics, and we still have limited supply of cattle. We're producing enough beef within the percentages of that because we've taken a fat steer from making him weigh 13 to 14, and he's weighing 16 to 16 and a half now. Everything they're teaching in the college is so far behind because everything I pick up and read, it's 62.5% yield on a steer, and he weighs 12.5, 1,300. Well, we went way past that. So I think probably in general, it'll be another positive year.
And he says one thing to keep an eye on is when the USDA reopens the southern border to Mexican cattle imports. However, Rodenberger said the market won't feel that impact right away.
there's 1,000,000-something cattle at cross at that time. And even if they open it up this month, I mean, we're still a year away from seeing any of that product hit the counters at the supermarkets.
Again, that's Bob Rodenberger of Stockman's Livestock Auction in Oklahoma. Well, while the final export numbers for 2025 have not yet been tallied, demand for U.S. beef, pork, and lamb remains strong, despite headwinds ranging from tariffs and a strong dollar to tight beef supplies. That's according to Dan Hallstrom, President and CEO of the U.S. Meat Export Federation. He notes much of that demand growth is coming from partners in key free trade agreements.
So if you look at what's been working well, you really have to start with some of these countries where we have existing free trade agreements. And there's no better example than Latin America. Mexico, absolutely on fire for pork, setting records for the last 3 years, including this year. And while beef is down slightly, still demand, when you consider the record high prices, demand continued in Mexico as well on beef. But it's not limited only to Mexico. Central America, another area that continues to grow and has the last 3 or 4 years. Can't leave Asia out either. Korea in particular has really picked up the pace the last several months. I think there's a lot of good things going on in these markets, which, as we segue into 2026, has a lot of opportunity going forward.
As USMEF looks forward to the new year, strong protein demand will remain, especially with an emerging middle class in many developing regions. Hallstrom says partnerships like the new USDA America First Trade Promotion Program will allow USMEF to lay the groundwork to build demand for U.S. red meat in rapidly growing markets like Central America and emerging markets in Southeast Asia and Africa in 2026.
Central America. It's been booming recently in the last 4 or 5 years, and we see further development potential on both beef and pork in that whole region. And you have some newer regions around the world, Southeast Asia in particular. Indonesia would be a very good example on the beef side, where there's a lot of work to be done investing some of these funds to further grow our beef business long term. Malaysia in Southeast Asia on the pork side, another very good example. And of course, you've got places like West Africa, Central Africa that we're starting to make some inroads on the variety meat side, but the real opportunity long term is on the muscle cut side for both beef and pork. As a global population continues to grow, the middle income, the middle class continues to grow, we are positioned in the U.S. beef, pork, and lamb industry to take advantage of that opportunity as we go forward in 2026.
And once again, that is Dan Hallstrom with the U.S. Meat Export Federation. Learn more at usmef.org. Well, oil prices were much lower in late 2025 than where prices began the year. Patrick DeHaan with GasBuddy.com says there were 2 key international issues that pushed oil prices lower last year: the ongoing war between Ukraine and Russia, and OPEC's progressive increase in oil production. But that changes this year.
OPEC is agreeing to pause the increases in production for the first 3 months, which certainly from that perspective makes a lot of sense, as oil demand globally tends to be weaker in the northern hemisphere winter. So for now, oil prices still relatively low. That's opened the door for falling gasoline and diesel prices, as well as jet fuel prices nearly coast to coast, with Americans in now nearly a dozen states able to fill up at least the cheapest station for below the $2 a gallon mark.
When it comes to the top news stories for 2025, DeHaan said the lack of turbulence is really what sticks out to him.
And it's been a remarkably balanced year. Gasoline prices nationally in the U.S. remaining between a range of $2.75 to as much as $3.20, a relatively tight range, and a very quiet year. We didn't see much of a seasonal increase in the spring, but now we're starting to see a big seasonal decrease in the fall. So it's been a pretty quiet year.
And DeHaan added as well that some have said these lower gasoline prices in the U.S. indicate a looming recession. However, he said he doesn't see a recession in the cards, noting that gasoline demand is seasonally strong. That is a look at Ag News headlines here today on AOA. As always, thanks for joining us for Agriculture of America. We are out of time. Coming up on our show tomorrow, we'll have a brand new episode of The Monthly Grind with our friends at the National Corn Growers Association. We'll talk about some of the things they're looking at as we enter into 2026. We'll take a look at the markets with Kyle Bumstead at Allendale and much more. Thanks again for joining us for AOA. I'm Jesse Allen. Have a good one. We'll talk to you tomorrow.